Let's talk about the best trading setups for the week ahead, including gold, stocks, crypto, and currencies. We're going to be taking a across the board look at key setups going into this week. Last week was crazy in markets. Maybe not so much for the gold traders out there. It's been a little bit sleepy town, but that could all be set to change with what we're about to talk about in today's video. We'll be taking a look at the institutional positioning that we got over the Friday close here. Some new institutional data was released that I'm going to talk about in this video. We're also going to take a look at the economies of the world and decipher which currencies might be on top. Whether crypto is closer to a bottom or if we have more pain ahead. Stocks, same story. Is that 5% pullback in the S&P 500 a buyable dip, or is there more to go? And gold headed back to all-time highs. Let's talk about all of it in today's video. As we get started, just remember, this is not financial advice. I'm here sharing my thoughts and opinions as always. It's for educational purposes only. And hit that thumbs up button, subscribe to the channel if you're new. Let's jump into today's top trading setups. So let's start this week's analysis by taking a look at the gold daily chart. Are we bullish or are we bearish on gold? I feel like I've seen a lot of back and forth on this here recently, and I wanted to weigh in on my thoughts. I think that the bull trend that we've seen in 2025 should be looked at innocent until proven guilty. Now, a few weeks ago, I was a little bit more bearish on gold as the dollar looked like it had a lot of upside. And to be completely fair, the dollar did have upside. We did see multiple weeks of upside in the dollar. And to be fair, we are actually still sitting near those highs of those moves. But at this point, I see a little bit more limited upside for the dollar index, as yes, the U.S. economy seems to be holding up a little bit better, and that jobs report that we got last Thursday was pretty decent. I mean, it wasn't fallout land like a lot of people had anticipated. And so, I didn't love the upside for gold the last few months, but in recent times, I decided to go ahead and actually pick up a long position, and I'm going to talk a little bit about why in this video. So first and foremost, our moving averages are still actually largely intact. You have all of them in line. These are daily chart moving averages. We're talking about the 20, the 50, the 100, and the 200. They are all aligned. And price, this past kind of little movement that's been going on, we actually broke above and have been respecting and holding for now the 20-period moving average. So with that said, I feel that we've actually had a consolidation in price, which if you've been watching my channel for a while, then you know this is actually exactly what we have been sort of looking for in gold. We wanted to see this as gold bulls during this major run up. We pointed out that if this thing kind of melts up and to the right, it could end up being a ginormous crash. So finally having some consolidation and letting these moving averages follow through and catch up is exactly something we've talked about on this channel many times. It's a healthy thing to have a pit or a pullback in time. Price has kind of gone sideways here on the daily time frame, and on a weekly and monthly time frame, things look completely fine here, right? Take a look at your moving averages on the the monthly and the weekly, right? We still look very bullish, and this is an environment where I am a dip buyer and still think we have upside from a technical basis first and foremost. Flipping over to the Edge Finder's bias, you can actually see gold creeps up in there as a bullish reading on the Edge Finder currently. We're getting a +5 score, and where we're really earning some nice points here is actually on the technical side of things. Technicals are being favored here by Edge Finder for gold, which I just explained and agree with. So it's spotting some strength on our technical score. Economic data looks a little bit mixed, right? You had some decent jobs data. GDP growth has been decently strong, but you also have some other metrics that are looking a little soft in the economy. So overall, gold is getting a +5 score. We count that as bullish within Edge Finder. So I do like gold upside. I think that if we actually take a closer look at our market scanner here and we select specifically for gold, we get a little bit of an interesting picture. So it's not an incredibly very bullish reading within Edge Finder. If it was, what you would get is you would have pretty much all of these things very blue. So I have to disclose that the position that I have on in gold with a stop loss below this 4,000 area of technical support, is not a huge one. I have a small long position on in gold, and this is actually not even my favorite setup at this moment. We'll talk more about that and as the video goes on, but I do still like the upside for gold. I think the path of least resistance is easier to break higher and continue back towards those all-time highs than it is to have some sort of massive price correction. Now, could that happen? Sure. That's why we use stops on our trades, right? We acknowledge that we can always be wrong. That is an important cornerstone to any good trader's analysis, is understanding you could be wrong about it. So what are you going to do if you are? So for me, I like this 50 and 20 period moving average as a general area of dynamic support in combination with this technical price action level of $4,000 an ounce. I like the setup. So I have a small long position on gold, and that is something that I think is also kind of in play with the US dollar. Let's take a look at the dollar here. What we have here, what I like about the dollar index is that we are sitting at a bit of a major level of resistance on the daily time frame. Now, I want to be clear, I'm not really bearish on the dollar at this time, but this does go in favor in the sense of precious metals. They're not exactly inversely correlated to the dollar, right? If the dollar's going up, that doesn't mean gold has to go down. And if the dollar's going down, it doesn't mean gold has to go up. It's not a perfect inverse correlation. And sometimes people make the mistake of thinking so. Gold and the dollar can move in the same direction at the same time. That being said, dollar index is sitting at resistance, and it doesn't hurt most of the time. There is some level of inverse correlation. It's not incredibly one-to-one, but there is some level of inverse correlation. In fact, I'll show you. Okay, so this window at the bottom is a correlation coefficient where we've basically mapped out the comparison between the dollar index and gold, okay? So we're looking 20 bars back on the daily time frame. You can see the correlation here is pretty wonky, right? If it was very obviously inversely correlated, it would sit at the bottom. Now, let me show you something important to be very transparent here. If I go over to my settings again, and if I broaden this out to 200, you can see over a larger stretch of time, there is most of the time a inverse correlation. You can see that most of the time, dollar strength means gold weakness, dollar weakness means gold strength, vice versa. So over a long stretch of time, that might be a little bit more obvious, but in the lower time frames, or not even lower time frames, but just, 20 period back on the daily, you can kind of see that. Anyways, the dollar index overall being at a major level of resistance like this is at least one thing in the back pocket for the bulls out there on precious metals. Interestingly, though, we do have certain kind of divergences in the dollar pairs. In fact, if I just isolate for a second major currency pairs, you can actually see it's getting more dollar bullish readings. We have dollar Swiss franc, dollar CAD, dollar yen, and pound dollar getting kind of a favoritism towards the US dollar at this time. More on that in just a second. In yesterday's video, I mentioned that we do now have new non-commercial COT data beginning to drop after the government shutdown update. I explained that in yesterday's video pretty extensively, so I encourage you to go check that out if you want to understand, because there are some caveats here. This is still looking backwards in time. We are getting data rolling in from kind of a month and a half ago, so it's starting to come in. That being said, let's take a look at the most recent data that we have. So in terms of latest weekly COT buys and sells that we have seen added into the system, Dow Jones, USD, AUD, GBP, these are some of your bigger buys. You can see change in long contracts, change in short contracts in the latest week from the week prior. We also have NASDAQ up there, and SPX is a little bit more mixed. If we take a look down further, you can see that we have some bigger sells on the Nikkei, US oil, JPY, platinum, etc. And for those of you guys who like to see this mapped out over time, we do also have our COT data history visualizer, where you can see that in the US dollar, there's actually been a pretty hefty short for most of 2025. Now, again, more data is yet to come on this, and we are catching up double time. Usually we get one per week in terms of the COT data. For a little while, we're going to get 2x per week to fill in the gap of time between. So eventually we will work up, I think by January, we're supposed to be back to 1 week delay in the COT data history. So again, more on that in yesterday's video if you want to explore that. And if you have Edgefinder, we put out this publication details for you to read on if you would like to, just to see how all that is functioning. So we did update this on Friday with new data, and we'll continue to do so for our users here within the tool. I mentioned this also, just some investor sentiment. This market is still very worried out there. You have a lot of market sentiment very much in the bearish camp. According to the AAII Investor Sentiment Survey, 43.6% of respondents said they are bearish on this market. only 32.6 say they are bullish. Specifically, of course, this is the US stock market, trying to get an idea of risk on versus risk off sentiment. This makes sense when we talk about the crypto sell-off that has been going on. Just take a look at that daily chart, and it has been a bloodbath out there in crypto land with lower highs and lower lows. I don't know if you guys have been seeing the charts floating around the cycle times of Bitcoin. It's been very interesting to watch that, where you get this kind of like 300 or so days to the 300 to 400 days downside, and then 1,000 days to the upside. And we can see that we have hit that 1,000-day mark. Apparently, this is a very consistent pattern within cryptocurrency. I wouldn't call myself a Bitcoin expert by any means. I'm not a buy and hold hodler forever. I have nothing against cryptocurrency. I just prefer to trade it rather than, just buy and hold it. If I'm buying and holding something, I like to hold, real estate, precious metals, and stocks, where I feel I understand a little bit more of what I'm doing. But anyways, cryptocurrency seems like it has potentially tried to find a low. If we do come lower, a major area of support on the weekly time frame is probably going to be that 75,000 level, I would imagine. We'll see if buyers can come in at that level. I think if that breaks, it's look out below, in my opinion. So we'll see. Continuing to watch this very closely, as I am very bullish on the indices. I discussed this in my videos yesterday. I do have a long position on the NASDAQ. I think we're at pretty critical support here. And if the bulls are going to hold it, this is where I would imagine that they are going to do so. So keep your eye on crypto. Keep your eye on the NASDAQ, S&P 500. I think that this is the spot if we're going to see it. I am getting some strong readings within EdgeFinder. When I kind of go back to my all view, we can see we have got Dow Jones, Russell, we have the NASDAQ, we have S&P 500. Nope, no S&P 500 on the list. So those are the ones that I am looking more bullish on. And with those readings, what that means is I start looking within my own technical approach to go look for some potential longs in my system. And I do need to clarify, sometimes people wonder, how do you use the EdgeFinder reading? A bullish reading on the NASDAQ doesn't mean you just go whip open the chart and click buy, right? A bullish reading on the EdgeFinder for NASDAQ, all that's telling you is that sentiment, technicals, and economic data seem to align in the positive direction. And then I take that and I go look for trades that meet my personal trading strategy criteria. We all trade differently. Some people trade reversals. Some people trade the 4-hour, the 1-hour, the 15-minute time frame, trend following, break and retest, breakouts. There's all sorts of different traders out there. EdgeFinder's not built for one type of trader. It's built for traders who want to incorporate macro, technicals, and sentiment in one singular tool. Top Setups algorithm sort of scans all of our data within the tool and helps to make that a reality. If you don't have a copy of the EdgeFinder, now is the best chance of the year to do so. We just kicked off our Black Friday sale, and the tool is 40% off. If you want access to this, take advantage. There's a promo code in the description down below. Should be one of the first links there for you. If you're interested in getting a copy, let me just tell you a couple preview things. We are going to be adding a lot more features to this tool. We already have a ton. If you're somebody who's interested in seasonality, if you're interested in economic heat maps to help better understand macro, to keep things simple, but to also scan a comprehensive set of data, or to have software that essentially does that work for you. It scans the economic data. We can go to our top setups reading. The reason this tool is so powerful and used by so many traders around the world is because it solves one critical component. Many traders recognize that economic data and macro data is very important and starts and stops trends in markets. However, tracking all that data off the top of your head is near impossible. Having tools like this helped traders to essentially bring that into reality and to make it more systematic in their strategy. I am honored to have customers all over the world. It is one of the coolest things I've ever done in my lifetime. It's one of my favorite, projects I've ever been a part of, is building the EdgeFinder. And it's truly built by traders for traders. I use this thing every single day to find the trade setups that I do. We just added a volatility heat map to see which markets are moving more so than they usually do. We have momentum heat maps within here. We have an AI news feed, which essentially generates a report on what's happening based on your favorite charts or just a comprehensive view of the overall market. This is being generated by AI on a consistent basis. We have our new AI market scanner, which will basically scan technicals, institutional positioning, sentiment, inflation, jobs data, and economic data. If you have not already picked up a copy of EdgeFinder, whether you trade currencies, gold, indices, or whatever else, take advantage of the discount, buy the dip on the Edge Finder. Like I said, 40% off, and you have a guaranteed rebound in price when it comes to this product because it is going back to its usual price after this Black Friday sale ends. Okay, so with that said, let's keep moving here. I want to just come back to the indices for a moment. So I've reiterated over and over on the channel here recently my thought process on the NASDAQ. I want to be clear because I make this point often in my videos. It frustrates me when I watch YouTubers in the trading space who kind of give you this analysis. They say, oh, it could go up, it could go down. I personally have an educated guess that I think this is going to go higher. Educated guess meaning I don't know this is going higher. Nobody knows with certainty what the market's going to do. Good trading is just flipping a coin with a slight favor over time, right? Let's say it's a 60-40 coin, right? You're still going to be wrong sometimes. It doesn't matter how good you think you are. Nobody has that 99% accuracy in markets, and anyone who does is probably Nancy Pelosi. Anyways, when it comes to the NASDAQ, right, I think we're at the 100-day moving average. I can see we have support looking left from that October 10th low. If bulls are going to hold it, right, I think this is where you see them do it. We've been in sort of a nice upward trend. I think we've entered into, at least for now, a bit of a pause. But I think that if bulls are going to stay in kind of constructive bullish market environment, they want to see this area hold. So I think you could get a little bit of a chase into year's end. Let me show you another chart that has been sort of my basis. It's not the only thing I'm looking at because it's never the only thing I'm looking at. Nothing ever is a kind of one and done for me. I like to look across a broad set of important macro, technical indicators, etc. This is what I wanted to show you, and I want to show you specifically with the NASDAQ. So if I go in here and let's see, where's my NAS? I'm going to go just search it up because we have a lot of charts in here. Okay, NASDAQ. NASDAQ going into year's end historically has an average 10-year performance where we do see a strengthening point from here into year's end. Now, this doesn't guarantee anything, right? We don't know that, this year we're going to have a perfect trajectory that's going to follow that. But let's look at the track record this year. It's been pretty decent. We had a nice strong out of the year gate. We had a little bit of consolidation in March, and of course April was really ugly for the NASDAQ. We bottomed later than we usually do, but we did see, for the most part, prices kind of regain in line with seasonality. And so I think we may have this environment happening again, where you have this kind of flush lower. And then I think we are likely, and again, if I'm dead wrong, I'll stop out and take the risk management approach like you're supposed to in trading, meaning I'll stop out of trades and reevaluate, and it's not leverage, and I'm not going to blow up my account with this idea if I'm wrong. But I think that this is probably going to find some sort of support and regain kind of the momentum of this year, which 2025 has been a blockbuster year for those who bought the dip. And if you did, congratulations, you probably made a lot of money this year too. The thing is, we don't know where the dip ends, and I think we have a good educated guess with the support level that I mentioned, but I still think trajectory in a upward year tends to end strongly. Why? Well, in the last 10 years, the NASDAQ has had pretty good years, right? It's been a really good period in the NASDAQ. Why is there this end of year rally? Well, we've talked about it before, but it is a very common occurrence when you have a good year. Asset managers, portfolio managers, hedge funds who have to take their performance and show it to their clients at the end of the year in their reports want to show that they were a part of this. This year has been an incredible rebound year. And as we've talked about many, many times on this channel, institutions sold heavily down in these areas. How do I know that? Well, we saw it in the Commitment of Traders report. They got bearish. Crowd sentiment was super ugly, and so was hedge fund institutional positioning. They got super bearish. And then when the market bottomed, people started chasing. And I think that chase can actually extend into year's end. I personally think, again, not financial advice, educated guesswork only on this channel. As always, I keep saying that over and over. I know if you're a regular, you've heard me say it 1,000 times, but I'm saying it over and over for the new viewers. I'm trying to, share at least my insights with as many people as I can. We never know with what market's going to do next. We can only make educated guesses and risk appropriately in case we're wrong. But I think that people who may have missed this dip or got played by that dip, if you sold the dip and you got terrified, I mean, my comment section was full of bears over here. For my longer term friends and viewers of the channel, you probably remember this. I was getting blasted in the comment section when we were talking about buying the dip on stocks during the April sell-off. People, especially people who really don't like the current administration, and I have no comment on that because, people said this under Biden too. It's not a Trump thing, but people who really don't like the administration, people who really didn't like the US, people came out of the woodwork saying, this market's going to crash to zero. You're an idiot for buying, and ended up being the biggest losers of this year. And I'm not saying that if that was you and you made a mistake and you're like, you know what? Yeah, I was way too arrogant. I made the wrong decision and I couldn't stomach or accept it, and I'm accepting it now. Good for you. But a lot of people don't make that. Honestly, that is applause, or you're worthy of applause if you're able to kind of acknowledge, I let the news headlines get to me. I let that scare me. I completely got played by it. Look, it's not your fault in the sense that the market is designed to play people. But right now we're seeing something similar where people are getting really pessimistic. AI bubble, the world's going to crash, everything's going to zero. And those, historically speaking, are times where dip buying has actually been very profitable in the last 20 years or whatever. So I think that we don't assume this market is going to die just because people in the comment section are getting really bearish again. So with this crowd sentiment going bearish and technical support at these moving averages and our historical level of support from that October 10th bottom and where we kind of launch padded off of, I think this is a buyable dip. And if I'm wrong, like I said, stop out. I'm not putting my entire life savings on the line if this thing rolls over. It's just a small risk. And if it keeps rolling over, I probably won't take as many aggressive longs on the NAS from a technical perspective, but I may actually get a chance if we can start heading towards that 200-day on the NASDAQ. That gives me a chance to go buy individual stocks that I like in my account. So if that happens, we roll with the punches. We take what we're given and we move along. Bigger dips, again, I almost always will step in and buy stocks that I like, as I did over in April and in March. I was a little early to that idea, but that ended up being probably, I bought Tesla. Some of you guys, I ended up closing a very profitable trade because I bought Tesla during this time when absolutely nobody wanted to. Now, was I genius for doing that? No, because I bought it too early, but it didn't really matter. At the end of the day, I bought a constructive small position and I built into it as the market started to rebound. And so my point with showing you this is that be careful. The doomsdayers are back. The bears are out of hibernation. They've been, destroyed this year, and now they're back coming out of the woods after, having a really rough, really hungry winter. Let's just say that. Again, I think that, and I'm saying that jokingly. It's just that, when they come out so confident, and then as soon as the market bottoms, you know what they do? Back in hibernation. You never heard from them again. I had one guy. You ready for this? I had one guy on my channel during this sell-off. He was very much a anti-Trump person. And again, I'm not defending Trump because people did this under Biden. People do it under every president. People let their politics completely sway their trading. It's not based on stats or backtesting or anything. It's based purely on emotion. I had this one guy who said that he refused to buy stocks because everything is going to crash all the way through 2028, which is, of course, when the new president will take office. So he made the point over and over when this market was going down, he's not going to touch stocks until 2028 because Trump's going to crash the market. And he said, it's going lower every single day. Guess what happened to that guy when the market bottomed and started moving higher? I never heard from him again. Until now, you're starting to see not that same guy, but new bears step up to the plate. They start to get confident when the market's moving lower, and then they all go quietly away if the market moves higher. Again, maybe this time they're right. But that arrogance gets people in trouble because people who had the huge, arrogance, who were saying they were short in the market, it's never going to come back, it's going down, those people probably got wiped out and have probably quit trading by now. I'm not saying that to tease those people. I'm telling you, don't make that mistake, whether you're bullish or bearish. If you're bullish, don't be an idiot and go full margin long, because what if this thing crashes? You don't want to, get destroyed in that scenario. Look, if this market goes lower, I'm perfectly fine. I take a small loss and I set up the next trade and I'm, you roll with the punches. But if you go full margin, go full tilt, and you believe, this thing is going to go up with a passion or you believe it's going to go down with a passion, you bet your whole account on it, you're going to blow up, maybe this time or the next time, but be careful with that line of thinking. Anyways, same thing with the S&P 500. The 100-day moving average still looks good. The Dow Jones also looks really good here. Value stocks here actually look really attractive to me. And if the market keeps rolling over, I've been, if you've watched me for a little while, you know I mentioned that I've been adding some individual stocks to my portfolio that have been kind of boring, and I'm kind of glad I have been doing that. I bought PG, I bought Comcast, which is another kind of boring stock. What else did I buy? I bought Kimberly-Clark. Recently had a big drop, so I've been buying some boring names in my portfolio. And if this market keeps rolling over, I'll probably switch from buying boring stuff to start buying a little bit more on the tech, more on the, more of the cyclical stuff. So that's just something I'll probably talk about on my second YouTube channel where I talk about stocks. Anyways, let's keep going. By the way, it's Trader Nick Stocks if you want to find me over there. Let's take a look further here at what else we can find in Edge Finder. We have a lot of yen pairs. I want to talk about this. We have Aussie yen, dollar yen, euro yen, and then I want to talk about the dollar pairs that we talked about as well. Let's take a quick look across the yen basket. I've heard a lot of people talking about the yen trade, people worried about the carry trade unwind. Let me show you why that is worrisome to people, and it is a fair thing to be worried about. Let's take a look at the Japanese 10-year yield. This is on the rise, okay? And so this rising threatens the carry trade, okay? So people like to, hedge funds, institutions, pensions funds, etc. What they do is they go to the Bank of Japan, they borrow money because it's a very low interest rate. And then they go out and they use those funds, they borrow the money from Japan, they go out and buy things in US dollars. And that is a very popular trade that has gone on for a while. But recently, 10-year yield for Japan, 30-year yield for Japan looks like it is continuously rising. And so that's causing people to get a little worried and actually unwind. It's costing more to borrow money from the Bank of Japan. So that's causing some of that trade to potentially unwind. That being said, I think we should watch it. I don't think we should let that dominate our fears. But I think it actually probably does play a little bit of a role in the recent pullback. That is often correlated with deleveraging, which we know has been heavily going on in the cryptocurrency world. I personally think that this, and again, maybe this ages like milk, maybe it ages like wine, because crypto is such a volatile place right now. But I think this is probably closer to a bottom and potentially has bottomed. That is my thought and opinion on this. When it comes to cryptocurrency, I think that the flush that we've seen here recently has been sort of part of a deleveraging event. And when people are worried about the JCT, the Japanese carry trade, what do they do first? What do they unwind first? The stuff that they can most easily unwind. Bitcoin is sort of something that is a pure risk on play for most investors, traders, hedge funds, etc. I think if the Japanese yen carry trade starts to cause concerns, the first thing people do is they sell their high risk stuff. And so crypto, I think, is taking a hit on that. I don't think that that's going to continue to be a problem. But hey, I could be wrong. That's why we put stops on trades. If this is bottoming out, one thing I'd look for is a break back above this trend line to the downside. If we see this, I think that looks really constructive for the bulls. We don't quite see it yet, though. So I'm not touching cryptocurrency at this time in terms of setups. From a longer term perspective, I have mentioned on the channel that I may take a stab at it if we do come down to the 75,000 level. From a trading perspective, I think that's a long-term huge area of support that bulls may want to defend, but I'll keep an eye on it. And if I take that trade, of course, I'll share it and update it inside of our VIP signals room in the Discord. Let's keep going. So I was talking about yen pairs. So let's talk about dollar yen specifically. I actually think that this has more upside to it. We just came shy of this area here, 158.50 or so. I think the dollar yen, we've been talking about how it has potential upside. I mean, this thing has been a rocket ship from the 151 level almost up to 158. I personally think we are probably headed up into the 160s on this pair. I think that we're probably going to go back and retest 161.80 or so. And if that happens, I think you may be a little bit due for a pullback after such a strong run up on the dollar yen. But I think generally speaking, you have upside on this currency pair. What I'd watch for is a break through this level here or at which point I think would be very bullish, or a pullback. So if we actually got in a little bit more granular and talked about where we could pull back on this kind of move, let's just go from this kind of swing low to swing high. We'll draw in some fibs from this, and you can see we've kind of got a level here around the 50 to 61.8% retracement that looks really good. Or if you're more aggressive, you could maybe watch that 38.2% retracement level. But dollar yen to me looks like it has more upside, and that goes for most yen pairs. I think, like for example, I mentioned CAD yen is also one that's been on my watch list. So CAD yen had a little bit of a pullback on Friday. I'm watching this area here right around this 50% retracement level. It looks really interesting. So we're getting kind of close on that one. So I'll watch CAD yen. I think this one also has upside. Aussie yen, little retest into this 100.96. We did get a little bit of sell off here on Friday. So I like this quite a bit. Kiwi yen, pretty choppy. I'd be interested at the low end of this range or as a breakout retest kind of idea for further upside in this pair. Let's talk about dollar pairs because I talked about them momentarily. So I already talked about dollar yen, so we're good there. I like the pullback or breakout retest setup. Dollar CAD is also one that is on the radar here. So let's take a look at USD CAD. Take a closer look here. We're sitting at resistance just shy of it. This thing has been in a really nice overall upward trend. You've had buyers stepping in and essentially buying each one of these dips. I'd be looking for either this setup or if we do come back to the bottom end of this range, I like that setup as well. Dollar CAD to me still has upside to go. Let's see, dollar Swiss franc. If I take a look at dollar Swiss franc, let's see here. We're still consolidating, watching for this one's pretty clear to me. Either a break through this one, right? Retest there. I like that idea, or a bottom end of the range. Now, of course, these ideas that I'm showing you, they may or may not actually turn into trades, depending on what Edgefinder says at that time. If the dollar Swiss franc breaks out, but we lose the bullish rating on Edgefinder, it's not really a trade for me. So I check in with the Edgefinder before I take any trade personally. Pound dollar is the other one here from the dollar side. So we'll take a look at GBP USD. And so this one's been in actually a pretty slow momentum change, right? We've seen this thing gradually shift to the downside here. Momentum has kind of slowed and now seems to be breaking through key level of support. Retest this area. I think if you come back up to the resistance point here, that to me looks like it has some potential downside. We should go ahead and change this to a different color here. So we'll go supply on the daily time frame. So a move like this, I think you could have further downside headed down to 1.29. Sounds pretty reasonable. When we look at the UK specifically, if I go take a look at UK economic heat map, I don't love the scenario here, right? So what we have is we have data that shows not a lot of strength, right? So we had services PMI come in lower than expected. We forecasted for 51.9, got just 50.5. GDP growth has been pretty terrible for the UK. At the same time, they are dealing with sticky inflation, 3.6% inflation, PPI at 3.6 as well. The issue with this, guys, is that with inflation high and growth low, this is the old stagflation concept. And if you think about it, will this cause the Bank of England to cut interest rates, hike interest rates, or hold them? It's difficult, right? Because if you're dealing with the inflation, you want to hike rates. If you're dealing with really slow growth, you want to cut rates to stimulate the economy. So they're stuck in a really difficult situation. I actually think the British pound is a really difficult one for me fundamentally on a longer term basis to be bullish on. And I think longer term, I sort of maintain more of a bearish outlook on the pound. It's just a tricky situation. These economic metrics look really unfavorable over the long stretch. And we do have just a little bit of a teaser for those who have made it 33 minutes. If you have Edgefinder, stay tuned on this because we're going to add some longer term projections into the Edgefinder scoring economic data wise for currency traders. I'm very excited for that. Taking a look at specifically like the actual data, like not the forecast versus actual, but just to look at the actual data in isolation and saying, absolute basis, is this a good number? Is this a bad number? Absolute basis, is this a good number? Not necessarily great for short-term trading, but excellent for longer-term swing trading and position trading, which when it comes to currencies is something that I do quite a bit of. So I think that the pound longer term is weak. And I think that this actually makes quite a lot of sense to me that you're starting to see a rollover in the pound. And I would not be surprised if the dollar did actually gradually make its way back down towards the low end of this range. Could actually even be a longer term short setup for me on the British pound. I do like that setup quite a bit, and we'll continue to watch that development. Let's go back to our top setups, see if I missed anything of obvious note. I already talked about gold, Dow Jones, currencies. Let's see, any other pairs here. And noticeably, you can see that we're getting all the yen pairs except the British pound against the Japanese yen. That one is not, that one's getting a neutral reading. So yeah, just worth mentioning. Like I said, guys, don't miss the opportunity to get access to the Edge Finder for our lowest price of the year. By the way, it's a one-time payment. So if you didn't know that, the Edge Finder is not a subscription model. It's not you pay every month or quarter or year. It is one time. And it's 40% off right now. So if you've ever thought about getting it, don't hesitate, because you won't get this chance at any time for the rest of this year. So take advantage, get 40% off the Edge Finder. Thank you very much for watching. Have a great trading week ahead.